Hey, welcome back to Two Super Guys Trade Stocks. I'm Dylan.
And I'm Vinny, and I have to talk to you about what Jerome Powell did to the market this week and one of the scarier charts to come out of the Federal Reserve I've seen in a while. All right.
Ooh.
This is what this is all about.
Nope,
All right.
there
I
we
want
go.
to put up, yeah. So the chart I'm hinting at is the background, but we'll get to that in a little bit here. Um, it's no surprise that the market took an absolute crap this week, but the funny thing is when it took the crap, right? It wasn't when the Federal Reserve announced their 25 basis point cut to
No.
the Fed funds rate. It was when Jay Powell started talking, and we
Yep.
got the S&P projections coming out. So that's what I'm going to be going through is S&P projections and a little bit about his comments
Got it.
because some of them are a little bit like, huh? Like, did you watch the press conference or?
Did not get to this time. I'm 100% relying on you. I
Okay.
do I do know TLT's not very happy, which I'm gonna be doing a video tomorrow on that. If
Mhm.
anyone's interested, because it sucks for me.
Yeah. So yeah, SPY down 2.5% for the week, but it was like a major cliff here. We rebounded a little bit on Friday, but
Yeah.
pretty horrible. Nasdaq 2.7%. This is the Russell 2000 here, 4.7%. That's the one that like I've been buying into for a little while because it's much more interest rate sensitive. In some ways, the Russell 2K or small cap index fund buying is similar to my version of your TLT trade, where I'm playing on rates coming down over time.
Yeah. What's great is I now have a chance to buy more Russell 2000 because I wanted a lot more. So this is kind of nice for me because I was way too light in that position. So
Yeah, nice. I bought a little bit on Friday too.
yeah.
But this is what you're going to talk more about with your TLT video. The 10-year rate is up to 4.5% yield for treasury bonds, which is crazy. you
Does
know,
not make sense. Yep.
so this is the dot plot, right? This is the Fed governors voting individually where they think the Fed funds rate will be at various time frames in the future, end of year basically. And if you notice the cluster right here, now we're basically calling for at most about a half a point in rate cuts going into the end of next year, which previously they were calling for a full percent, meaning 4 rate cuts going into next year by the end of the year. Now we're only calling for half that amount, right? A little bit of a dispersion pattern here. There's even some people saying we might not cut it all from where we are, which
Now,
is crazy.
it should be noted, Vinny did an analysis like a year ago on how accurate these are. Spoiler
Yeah.
alert, not in any way accurate. So
Mm-mm.
this is a total shot in the dark. These are
Yeah.
kind of not. These are pointless. These are
Yeah, exactly. I mean, it's what they're thinking, but it's not set in stone. This is
right.
this is just theirs. You ever heard the term swag? Uh,
Yes, I've heard the term swag.
Not in terms of being cool, but as in a scientific wild ass guess.
Oh, I have not. Ooh, that's a new
Yeah,
one.
well, there you go. I just taught you something new.
Boom.
The cool thing you can take here, so we're going to go through a few different economic data points that they track, and we're going to be able to see the trend between what they thought they were 3 months ago and where they think they are going to be now.
Got it.
Look, this GDP, right? The little ghosted area is where the votes were 3 months ago, and then the
Okay.
blue bars are where they are now. So pretty dramatic shift up
Yeah.
in GDP estimate from 3 months ago for
Wh-
this year.
Which is why that dot plot is ridiculous. Look how different it changed in 3 months versus that dot plot was 3 years out. So okay.
Yeah, yeah. They're wrong on a monthly basis, never mind on a
I
multi-year
know. Yeah.
basis. Right?
There's no way.
Um, and as we go a little bit further out, they tend to be a little bit more consistent with themselves, but it's not as certainly not as certain, right? It's just at that point you're basing it upon a little bit more of your intuition and your own personal scientific wild ass guess than you
Right.
are on cold raw data.
Yeah.
But GDP, the economy's still been hot. It's still coming in strong. I was talking to someone that's out Christmas shopping today because we're filming this on what do they call it, Super Saturday or something like that. Um, Unemployment. Look at where the trend was 3 months ago and where it's been brought down to now. Right,
I
and same thing
mean,
here for next year. Unemployment down compared to what they thought 3 months ago.
yep. Everyone is shocked in this one. This is going to be the first time in the history of the stock market that the SOM rule has failed. Classic,
Yeah,
right? Just a new first every like 6 months now.
yes, we are. Ever since the pandemic, we've been living in like this is the first time ever this has happened
Yeah.
territory over and over again. It's been
Yeah.
amazing.
Doing old strategies is now pointless. It is. You might as well just do Tesla. I don't know. They're like doubled price in like a month. I don't even know why. It's crazy.
Buy the Mag 7, man. PCE. All right. This is how much PCE, which is the federal governor's favorite inflation tracking metric, has moved in 3 months. Their prediction for like this year, and then for next year. Look at the dramatic shift here. So this little dotted area was where they thought we were going to be 3 months ago for this year. All right. Look how much that shifted.
Point 0.4.
Yeah. You got to hear what
0.4%.
Powell's comment was about this in the earnings. I mean, in the conference here in a second. And then even for next year, look at this whole area now
Yeah.
empty. Now everyone's moved uphill.
That's insane, man.
Yeah, even more so, core PCE. You know, they asked a little bit about core versus like kind of headline PCE numbers, which one matters more, why they matter, that sort of stuff. But core is the one that it's been a little stickier, if you will, right? Because we saw energy prices come down pretty dramatically. So headline PCE has been lower than the core PCE for the last year now, effectively. But core PCE for this year, they revised it up over 3 months, and then for next year, they revised it up as well. And
Yeah.
even going out into the future. Look at this.
Which
This is 2026 now. They had a dramatic shift for 2026 up in their expectations.
there was a theory that Jerome Powell only did this cut because of the pressure to do so for predicting he would earlier. Because
Okay.
if they're thinking, oof, inflation is going to be sticky, you should not cut. You should not do that. And then they still did it.
Yeah. Yeah. Yeah.
Unless the
So
unemployment rate starts going high. The economy is still fine. Just chill.
yeah, exactly. So this is kind of like the scary chart here. The two things I wanted to point out. Look at the not only the kind of where we are as far as PCE and the expectation of it going forward. This is which way do you think, if we're wrong, which way do you think we will be wrong? Look at the shift here where they're saying broadly balanced to now weighted to the upside. Broadly balanced to now weighted to the upside on both core and headline. All right. Basically, they're saying, yeah, bro, it may be going higher. Maybe going higher. We may not be able to control this thing as well as we thought for a while.
Shouldn't cut.
Yeah. Well, he touched on that a little bit in the conference and talked about how even though we did cut, they're still at a restrictive monetary policy stance. Okay. Someone even asked him, would there be a possibility that you might have to raise rates next year? And he's like, well, we wouldn't take that off the table, certainly. I mean, Powell's a politician in terms of the way he answers questions,
Yeah,
but
well, to be fair, that's a stupid question because you're literally asking, hey, with absolutely no data right now, could you
yeah.
theoretically raise it? Well, sure. I mean, if there's a giant war, there's a million scenarios that can happen where you'd have to raise it. That's a stupid question. That's a stupid journalist question.
Yeah.
Like,
Uh, check out these like paraphrase quotes from Powell from the press conference. So, driving in fog or walking into a dark room full of furniture. This is what he compared the current state of basically economics in the United States in terms of predicting future inflation. He's like, we're basically just like we took off our shoes and we're walking into a dark room full of furniture with really, really sharp corners. And we're probably going to stub a toe at least here.
yeah. I mean, look, man, there's other countries that are having a much worse time than this. I think, like, England was rough for a while.
Yeah.
So, I think he's still doing a great job. I do disagree with this last cut though, if I'm being honest.
Yeah. No, I think it's this last cut's reasonable. We think about it, we're still, yeah, in theory, people will say that you should be above the inflation rate in order to actually control it from a Fed fund standpoint. And now we're at what, 4.25%, I want to say, for the Fed funds rate. But the headline PCE is what, 2.4, and core PCE is like 2.8. So we're still like a point and a half above that, meaning like we're still in a restrictive monetary stance, even though they did this quarter point cut.
Yeah. No,
If
I
they did
agree.
another half a point, then we might be getting it to a point where we're like, it's really neutral now. But they're still in a restrictive stance. They don't really know exactly where it is. That was a discussion point. Which model do you believe? Where exactly is the restrictive point? He goes, like, we don't really know. He goes, we think we are above it based upon all the other data we have. But, it's you can't stay pinpoint and say this is the neutral rate right now. That's way too precise for economics.
That next quote's kind of funny.
Yeah, yeah. When asked about the kind of PCE data, he's like, our inflation prediction for this year kind of fell apart as we approached the end of the year.
Yeah. Well, because
Just fell apart.
I do think unemployment was a lot better than they thought, and inflation was stickier than they were hoping. So they're like,
Yeah.
okay, hold on, should we do it? Shouldn't we? We predicted we would. I don't. There's not really a right answer here. This is unbelievably tough. He's got a
Yeah.
horrible job.
It's very, we're very much stuck in like a zone where you have unemployment is still relatively low, right? We haven't violated the SOM rule, but there's certainly signs that the labor market is not, what's what I want to say here, it's growing at a rate where they said they would be, you would expect the unemployment rate to tick up about zero point 0.1 every month or two. So we are still creating fewer jobs than are being lost.
Yeah.
People that are unemployed right now are struggling because it's harder and harder to find jobs. That's something he talked about in the press conference as well. But it's not so broken that they need to cut rates dramatically to buoy the job market. Inflation has come down a lot. As you reminded us, we were at 5.6% PCE a year ago. So
Mm.
we've had that in a year, but we haven't seen a whole ton of significant progress because we're lapping really good numbers from last fourth quarter. So we're kind of stuck in a place where we're not making tremendous progress on PCE, on a month over month basis, but on a year over year basis, it's still come down a lot. And the economy as a whole has still grown above what they expected, right? So GDP has been hotter than they thought it was going to be. So the U.S. is in a place where the economy is still growing really well. Unemployment is still relatively controllable. And we have inflation that's sticking around a little bit more persistently than we'd like. So I can't say I blame them for, I don't see them moving on rates for a while. So, those two cuts we're going to get maybe next year as we're accounting on this, you're not going to see it probably in the first half of the year.
Or at all. I don't know. I don't think we're gonna. I don't know about that. I will say the housing market is stale as hell. I think that we had the least amount of houses since like 1995 or something. I'm gonna touch on that for a TLT tomorrow.
Oh, nice, nice. I look forward to hearing about it. Yeah, that was something you mentioned too, a housing market coming more into balance better. You said
Yeah,
we've seen more weakness there than we have in other sectors of the economy now recently.
yeah. All right, guys. Let us know what you think.
That's the next one.